Hi everyone. Uh, Now I had already given you on at Modo our first two tasks to just warm up last week. From the current week, we're gonna start with our regular syllabus coverage, and we'll go ahead with the topics planned to cover the rest of the grade 9. And the first lesson of the term is the cash book. If you see on the first slide, it says chapter 10. We are going to just strike it out because this PowerPoint I did for the previous session where there were chapters in the text, but you have got syllabus units here. So we'll replace chapter 10 with your syllabus unit 2.19 to 2.21. So it's 2.9 to 2.21, pages 84 to, so let's write the page numbers also in your textbook. You will see pages 84 to 89. So it's pages 84 to 89. So having made this notation, we are ready to go on. If you notice, it says it's a journal and a ledger. By now, I hope you appreciate that there is steps of activities that you do with all transactions. Let me just remind you very briefly that every transaction is supported by a business document, which is the source document. So you got to look at the transaction and then you have to decide what source document is there to evidence that transaction or support that transaction. After you have identified the source document, then you got to enter the relevant source document in a relevant journal or book of prime entry. So if you remember, we have done already the 4 journals for the inventory movements, and we have already covered the documents which are needed for those 4 day books, sales day book, purchase day book, sales returns day book, and the purchase returns day book. And if you remember, the documents were the invoices and the debit notes and the credit notes. Now this is the 5th book in the series of journals. So again, this book again will have to see what transactions are recorded in this book and what are the source documents for each of those transactions. So as the name suggests, and you have already seen on the first slide a picture, and we collaborated with a couple of questions on the collaboration board on our Nearpod lesson. So we'll just continue with our presentation. So let's move on. Now this is how your cash book looks like. So if you can just stay here and let it sink in for a while. And it says 3-column cash book. For now, you don't have to bother too much about 3-column or 2-column. This is the cash book you'll be mostly looking at. And if you can circle the 3-column here, you can just circle the 3-column, and we can go down and see the $3 signs on either side of that black bold line. So you can highlight those dollar columns. So these are the $3 columns on the debit side or the left side, and there are other 3 columns. The $3 columns or the amount columns on the credit side also. So if you see the reason for calling it a 3-column cash book, because it has 3 amount columns on either side. And when I say either side, you should notice that black bold line in the middle. So can we just see that black bold line in the middle? So this is the dividing line. And this makes it more like a T account, So if we can draw a big T here, so there is the top stroke of the T, so we can just draw the line and we can see that it is actually a big T here, So this big T is actually a big T account, but within that T account you notice like there are 3 columns on either side: the cash, bank, and discount allowed and discount received. Cash and bank columns, they work in one way, and the discount columns work in a different way. So here I'm just emphasizing that discount columns will not be treated the same way as cash and bank column, and how they are different we're going to see in later slides. For cash column and bank column, it's actually the cash account and the bank account, So if you see the cash column on the debit side and the cash column on the credit side, that makes it cash account. Then bank column on the debit side and the bank column on the credit side. That makes it a bank account. So it's actually cash account and bank accounts combined into one book, and we have named it as cash book. When we use the word cash, so let's just say cash actually means cash in hand and cash at bank. So you will this cash will include, so can we circle the word cash and just make a notation on the side. The cash here means cash in hand and cash at bank. So just bear with us for a while. You can just make notation. So this is cash in hand and cash at bank. So this will include your currency notes and your coins, and it will also include the money which you have in the bank. So this is your cash. So cash in hand and cash at bank. So if you at any time want to know how much total cash the business has, you would just add up the cash that you have in office. And if you remember, in our SOFP we used to have it as cash in hand and cash at bank. And we'll see in another topic which we're going to cover after cash book that some of the cash in hand will be kept as petty cash also, which will be just a small amount of cash and coins, and we'll see how that works. And then we would even say that cash is actually three things: the petty cash and the cash in hand and the cash at bank. So for now we are not considering the petty cash. We'll just restrict ourselves to cash in hand and cash at bank. Okay, so having just seen the columns, the other columns are normal. On both sides there is a date column and details column. So if you see on debit side there is date and details column, and on the other side also there is a date and details column. This is a feature of all the journals, because in journals you record transactions as they happen in the order of date, and in the details obviously you will have to make a notation or the explanation of the other account, or of the double entry here. So this cash book looks like a T account, and it also looks like a journal, because it will record the transactions from the source documents, and it will also have two accounts combined into it, the cash account and the bank account. So cash book is one book which works like both. It's a book of original entry as well as a book of double entry. And why is it both? Because it records the transactions in the order of date using the source documents. So it's the first record of all the cash and bank transactions. And it also contains the T accounts for cash and bank, which makes it a kind of ledger also, because the ledgers have accounts in them. And this one has also two accounts in it, which is cash and bank account. So since cash and bank accounts are contained here in the cash book, we do not have to do cash account and bank account in our general ledger. If you remember, we already discussed about the sales ledger, the purchase ledger, and the general ledger. So giving you again a brief reminder of that, sales ledger has all your TR's account, purchases ledger has all your TP's accounts, and nominal ledger has all other accounts. And the cash book has only two accounts in it, which is cash and bank account. And again, I'm not mentioning discounts here. Why, you will notice in a while. Now if you see on the left side of this black bold line, there are receipts shown here. So can we circle the receipts? Can we circle the receipts? And you can see there are receipts here. So this side is the receipts side. You can call it debit side because it works like a ledger also. So this is the debit side of the cash book, or you can call it the receipts side of the cash book. So this is basically all the money coming in. So this records all the money coming in. So can we make that notation? On the left side, records. So this side is recording all the money coming in. Records. So it records all money coming in. So basically you are receiving the cash and you are receiving the checks. On the other side, if we can circle the payments, so you see the payments, and you would have guessed it by now that this records all the money going out. So this records all the money going out. So records all money going out. So the cash that you pay out and the checks that you pay out. So if you can see it, it's the same thing as cash account and bank account. If you remember when we were doing the T accounts for cash and bank, we said that the cash coming in goes on the debit side and the cash going out goes on the credit side, and for the bank account, checks coming in go on the debit side and the checks going out go on the credit side. Exactly the same thing here. So if you receive cash, you will put it on the debit side. If you receive a check, you will put it on the debit side. And with the cash and checks received, sometimes you have to allow discount, and you know that also now which discount we refer to. So this is your cash discount. If somebody pays you on time, you will allow him a discount and you will enter it on the debit side as discount allowed. So this is the discount which business is allowing to its customers who pay within the credit period. On the other side, cash going out and the checks going out, and so you are making payments, and if you make payments on time, you may receive discounts from your suppliers and you may enter it in the discount received column. So that's it for this slide. So this is your 3-column cash book, and you will see sometimes they tell you to do 2-column cash book. I will not go in detail for that, and there'll be no separate slide for it. Only one thing for the 2-column cash book is that it does not have the discount accounts. So if you make a cash book with only 2 columns on either side, those 2 columns would be your cash account, cash column and the bank column on debit side, and the cash column and the bank column on the credit side, and no discount columns. So there will be no discount allowed and discount received if you are doing a 2-column cash book. So that does it for this slide. All right, so this slide is showing a completed cash book here. So if you can notice the debit and credit written there, you don't have to write that, but you know, like, left side is debit and the right side is credit. So these debits and credits, you don't have to write. See the columns, the discount, cash and bank, discount, cash and bank. On the previous slide, we had written cash, bank and discount. The order is not significant. But you have to follow the same order on both sides. So you can write it as discount, cash, bank on left side. So you have to write discount, cash and bank on the other side. You can swap this order, but the order should be consistent on both sides. Now, let's see the period. If you notice, this is for the month of July. So can we just circle the period? So it's recording transactions for the month of July. So you see all the transactions related with July on both sides. So normally a cash book is done for a period of 1 month, and then it is balanced, and it is balanced like a T account, but it can be done for a period other than 1 month. You can do your cash books weekly or monthly or for any other period, so for that you have to read the instructions, but as I said, usually we do it every month. The first thing on the debit side, if you see, there is balance brought down. So let's highlight balance brought down. So you see the balance brought down. This is the balance coming from the previous period, you know that. And if you see in the cash column, there is $419. And in the bank column, there is 3685. Even if these numbers are not visible, it's just a sample. So you can see this is the amount of cash coming from the previous period and the amount of money that you had in the bank at the end of last period, And now let's box all the transactions. Let's make a box around the transactions on the debit side. So these transactions on the debit side, this is all the money received, So can we make a notation again? So this is the money coming in. So this is the money coming in. Okay. So all these and from different sources. So if you see on July 2nd, there is a check received from A star. So can we just hover past A star? Yeah, A star, and we are receiving $296 from him, and this is received by check from him. The next one is sales. You made sales. So let's highlight sales, and you got sales were made for cash. So this is the amount. Then we got a check from someone called Builder. and this is the check which is of $500. And then this is an unusual transaction. If you see, it says bank to cash, there is a $200. Okay, we'll leave it for a while, or we'll highlight in a different color. So can we highlight in a different color, please, because we need an explanation for that. So let us highlight it in a different color. Bear with us for a while. So and there is a similar, if you see the date beside it, it is 23rd of July, and on the other side also there is a 23rd of July, and we will also highlight it in red, and I will come back to that in a while. And if you notice, the amounts are also the same. So can we highlight that in red, the whole transaction, the amounts and the bank to cash? Okay, and we can highlight it here also all the way. So this is a transaction which is a typical one, and we can explain it in a while. There are other transactions similar to that. You can see on 28th and 31, which is cash to bank. We can highlight in a different color again, a third color. Let's say we highlight in green, and we'll highlight the other 317 on the other side also in green. Okay, and there is one more which we just same, so we'll highlight in green, and there is one more on the other side which is okay. So we can explain these in a while. Then on 28th July there is J. Paul there. So we go back to our regular highlight color, and we see J. Paul, and we received cash from him. You can see 317, and we also allowed him a discount of $8. So actually this guy was owing us 317 plus $8. So this guy was owing us 317 plus 8, which is $325, but he paid us 317, and we allowed him a discount of $8. Going on to the other side, we are making payments here. So first payment to heating is for heating is 102. Then we paid to Moore 211, and we received a discount here. So actually it was 211 plus 13. So we were owing this guy 224. Okay, and then the next guy also we paid, and we received a discount. You can see how much. Then we paid wages in cash, and we paid another supplier in cash, and then we again paid wages in cash. So we keep on highlighting these normal transactions. These are all payments, and they are paid by cash. And then on 25th we again paid wages, but this time we paid them by check, and we paid for heating again, and this time we paid this heating in cash again, you know. So if you notice, all the transactions on the debit side, they are cash coming in and the checks coming in and the discounts allowed, and on the credit side, all the yellow transactions or the yellow highlighted transactions are the cash going out and the checks going out, and there is basically discount also there. So this is your money going out. So all of this is your money going out, as we annotated on the other side as money coming in. So this is your money going out. Okay, right. Now let's go to those transactions we highlighted in red and green. So the first transaction we highlighted in red, you see this is cash coming in 200, and on the other side there is 200 going out of the bank. Now you can brainstorm it a bit. It's actually just the cash moving places, you know. So you are moving some of your cash in the bank and you are taking it to cash. So again, what's happening on 23rd July? You are taking $200 out of the bank. This $200, it is taken out of the bank and it has gone into the cash, you know. So this will not change the total cash the business has. It's just you are moving some of the cash from the bank to your office, you know, for your office use. It's not going outside the business. You are not taking it for your personal use. It is, so don't mix it with drawings. So bank is decreasing by 200 and cash is increasing with 200, and that is just the cash changing places. Now this kind of movement of cash from bank to cash or cash to bank, we call it contra entries. So can we make a notation of that somewhere? So this is basically your contra entry. So we'll just bear with us, we'll make a notation for that. So this is your contra entry. And the amounts have to be same on both sides. So if you notice, this is your cash increasing, and on the other side this $200 is also a contra entry. Actually both of these together will be considered as a contra entry, so we can mark this $200 also as a contra entry. So this is your contra entry also, but don't imagine them as two contra entries. This is just one contra entry. Okay, so the debit of the contra entry and the credit of the contra entry. So the effect is bank decreased by 200 and the cash increased by 200. In your book and in other places you will see that a C is written beside it, and you will find a C written, a small letter C. So if you can just write a small letter C within brackets, so contra entry will be marked with a C. So you can also show it with a C. So if you see this small C written beside an entry in the cash book, it's a contra entry, which means the cash is just changing places. So it's not the cash going out anywhere. It's actually just the cash changing places. The other two contra entries you can see in green. This is the opposite. They are again contra entries. So can we just circle them or box them both? Yeah. So both of these are actually these two here. Bear with us, please. Yeah, these two on the debit side and also their credit effect on the other side. These two here, so they are also the contra entries. The difference between these green contra entries and the red was bank was decreasing and cash was increasing. Here it's opposite. Cash is decreasing and bank is increasing. So what you are doing is you are depositing cash in hand into the bank. So cash in hand is being deposited into the bank. So if you see on 28th, you deposited $317 of the cash into the bank, and then 260 or 280 of the cash in hand is deposited into the bank. So this makes your cash in hand less and cash at bank more. Okay, so the contra entries are important. You have to understand them, and they can be asked as a definition, and you will sort of get them in the actual making of the cash book also. Once you have done all the entries in the cash book, the final step is to balance it. So let's do the balancing. The balancing has to be done only in the cash column and bank column. So discount columns will not be balanced. So we will only balance the cash column and the bank column. So we can see the balances here. Can we highlight the balances in different color? So let's highlight them in a different color. So these are your balances. So let's highlight the balances in a different color. So this is your balances, and if you notice, the balances only appear in the cash column and bank column. And I will not teach you again how to balance. I'll just tell you how we do that. We'll go column by column. So on the cash column on the debit side, if you see there are numbers there, 419, 146, 200 and 317, they are adding up to 1082. The numbers in the cash column on the credit side, 102, 104, 21, 102 and 105, and 317 and 260 or 280. So you know how to balance. You will add up all the numbers on the debit. We are adding up to 1082, and then we will subtract all the numbers on the credit, and we'll get $71 of cash left with you. So this $71 is your cash in hand at 31st July, and it is written as, there's a mistake here, balance BD. Can we just strike this and write here balance CD? This is not your balance BD, this is your balance CD. So can you just place beside that, yeah, and just strike out with a line the BD. So this BD is not correct, okay? So it's not BD. You know that balances at the end of the month, they are not BD balances, they are CD balances. So the balance CD is $71. So this is the cash you have at the end of July, and this cash will be transferred to the next side, I mean on the next period on the opposite side as balance BD. So this balance CD becomes balance BD. So we can just draw with an arrow if you can, that this becomes your bear with us for a while. So you can see this $71 of balance carried down goes on the other side as balance brought down on 1st of August. The same calculation we're gonna do on the credit side. So we'll balance the bank column. If you see on the debit side in the bank column, the debit side in the bank column is adding up to, so we can see the bank is adding up to 5058 on the debit side, and then we will subtract the numbers on the credit side in the bank column to get a balance of 3195. So this is your closing balance of bank. So you have 3195 in the bank on 31st July, and this is going to become the opening balance of August. So we will shift this in the bank account as the opening balance. Can we take the arrow a bit lower so we can see the amount? It's okay because it's just standing up in bank column. So that's how we balance the cash book. Now the final thing about the discount columns. So if you see the discount column, there is $8 and that's it. We write it as a total of 8 there. So discount column is 8 on the debit side, and the discount column on the other side is $41. Okay, so if you notice, we did not make the two totals equal here. With the cash column, if you notice, after inserting the balances, they have become equal: 1082, 1082, and 5058 and 5058. And for the discount accounts, we did not balance and we did not make the discounts equal. The reason for this being, this is not a discount account. These are actually two different accounts: discount allowed and discount received. But in the cash book, they do not appear as T accounts. Those T accounts will be done in the general ledger, you know. So we will not balance the discount columns. We will only balance the cash and bank columns. So that shows you how to fill up the cash book on both sides and how to balance it. And the special emphasis for the counter entries colored in red and green. So you have to watch out for the counter entries. And that's it. That does it for the cash book explanation slide. Okay, on this slide, it's all whatever I spoken about cash book on the other slides. Now it is just in sort of theory, you know. So these are kind of notes. So there's nothing new. Whatever I explained to you in the previous slides, here it is written as notes, you know. For those who learn just by reading, they can read this and they can understand what the cash book is. So I will not make any new notations here. So you can just read this. It tells you what is a cash book and what does it record on the debit and the credit side. Let's move on. Again, this slide, it tells you about the balancing of the cash book and the difference between the cash column and the bank columns and the discount columns, why they are not balanced and how they are treated, and about the counter entries. And I've already explained these to you as well in the previous slides, you know. So let's carry on. Now this is our textbook question. For that, you should take your textbooks and open them on page 96. So keep the question open in front of you on page 96. Okay, apologies for the wrong page. As I told you that these slides were done in the last session, so pages in the second edition were different. So in the third edition, it's page 92. So textbook page 92, practice question 7. So I've already solved it here, but I'll walk you through with this each transaction. So I expect you to have your textbook in front of you, open that page 92, question 7. And I will read for you the first paragraph and then we'll go transaction by transaction. It says Ombia on the retail business on 1st of April 2018. If you notice the date here is 2014. So you can we can make a correction here. So this is 2018. While it is being corrected, I will read on. And it shows the cash in hand was $580 and cash at bank was $2 to $6, and during April the following transactions occurred. So I'll pause here for a while until. So we have corrected the dates also. It's 2018 April, and if you see in the second and the third line, it says balance brought down is $580 of cash. So there is balance brought down $580 of cash, that's cash in hand, and 2260 cash at bank. So if you notice, this is the balance BDs and we have entered them on the debit side. Sometimes you will notice that the balance brought down in the bank can be on the credit side if it is bank overdraft, and you know what is a bank overdraft. So if in a period you ended up as a bank overdraft, the next period you would start on the credit side as bank overdraft, and that will be your liability, you know that. Cash will always start on the debit side, cash in hand, or there'll be a zero cash, you know. So you cannot start the cash column on the credit side, it's impossible. For the bank column, you can start on debit side as we are doing in this question, or you could have started on the credit side if it was a bank overdraft. Now carry on. On April 4th, there is a transaction. So April 4th, let's highlight April 4th, and the transaction is that you pay your trade payable B. Elias in full settlement of their account, $1,800 less 5% cash discount. So you had to pay this guy $1,800, but you are paying him only $1,710, and the remaining $90 is the discount that you received from him. Okay, so let's show a calculation. This $90 here is the cash discount, which is 5% of 1,800. So bear with us. We'll just show the calculation for this $90. So you can see the calculation for the $90 here. You had to pay this guy $1,800. Excuse me, but you are paying him less 5% cash discount. So the 5% is the $90. So we will pay him 1710. So let's show the calculation for 1710 also.
Okay.
So let's show a calculation for this. You would have already done it when you calculated the 5%, because the 5% of 1,800 was 90, and then we minus the 1,890. So we minus the $90 from 1,800, and we get the amount that we paid to him. So 1710 is what we paid to this guy. These calculations we have already shown when we were doing the T accounts on page 6 of the past papers, if you remember. So we have shown these calculations once, but next time we'll not show them in this much of the detail. So make sure that you understand here. Once more, you had to pay this guy 1,800, but you are paying him after receiving a discount of 5%. So 5% discount is the $90, and the remaining amount is 1710, which is in fact the 95% of what you had to pay him. Okay, next transaction is on April 7. It says cash sales, so it's simple. Cash sales means you received cash, so your cash is increasing by 830. and you are getting this cash by selling goods. So the double entry is in the sales account. So that is pretty simple. Next one is 13th April, transferred cash to bank. So you have transferred, this we will highlight in a different color because it's a counter entry as we showed you on the previous slide, so red color. So okay, let's do it in yellow. So you notice this is excuse me. So this is your counter entry. You are moving cash into bank. So your cash is decreasing by 750. So you can see cash is decreasing by 750. So cash decreased by 750 and your bank increased by 750. So this is your counter entry. And you see the dates are the same on both sides and the numbers are also the same. So this is one of the counter entries happening on the same day, $750 and $750. Okay, so this is a particular one you have to make a note of. This is a counter entry, cash decreasing and bank increasing. The next one, 14th, and if you notice, sorry, before I go on, there's a C written there. So can you circle the C there? So this C is showing that it's a counter entry. So if you remember in the last slide, I told you that there be a C just to highlight that this is a contra entry. So cash is changing places. The next one on 14th, we have received a check from H Car and their account was $480, but we are receiving $468 from them and allowing a discount of $12. So we'll not show the calculation again. It's exactly the same calculation as we did for April 4th transaction. So you will take the $480, multiply it with 2.5% and get $12, and then minus the $12 from $480 to get $468. So we got this check from H Car and we allowed him a discount of $12. The next one on 21st, we are purchasing new office furniture. So this is a payment, so money is going out, so we'll go on the credit side. So you can see on 21st we are purchasing office furniture and paying it by check. So in the bank column we put 2950. A very common mistake is sometimes in the details you may end up writing purchases, but because the word purchase is there, so don't be mistaken by the word purchase. If it is purchase of goods, then you can write purchases, but this is not purchase of goods. This is purchase of new office furniture, which is a non-current asset. So the entry would not go in purchases account, it would go in office furniture account. So if you write purchases here, it'll be wrong and you will lose 1 mark for that. By the way, the mark scheme would show you that to get a mark, the details have to be correct and the number in the cash column or the bank or the discount column should also be correct to get a mark. So if you even though if you put the correct amount in the bank column as 2950, but if your details were wrong, say you wrote purchases here, you will not get a mark. So make sure you write the correct account in the details column. On 22nd, you are paying for general expenses in cash. So this is a simple one. So it's a payment again. Cash is decreasing by 240 and general expenses is where you will make the double entry. The next one is you are again paying another trade payable. This is very similar to April 4th. So you can go up on April 4th and remind yourself how we did that in an exact same way. We will do the calculation, and the only difference is that now we have a different trade payable, T. Alice. So you're paying this trade payable 5% less than what you had to pay. So we made the calculation. So 5% of 2,700 is 135, and then subtract the 135 from 2700 to get what you paid him. So exactly like April 4th transaction. So can we show these two together, combine them with an arrow? April 4th and April 26th. So April 4th and April 26th transaction is actually the same, so you can just make a note of that. Next, It's probably the last transaction. You are paying bank charges. Now if you notice, it says bank charges, but it doesn't say you paid by cash or by check, but it's understood that it will be paid by check because bank will automatically deduct it, from your account. So the bank has already deducted from your account $220 for the bank charges. So that does it as far as recording is concerned. We have recorded all the transactions. Now the last step is balancing, and you already know how to balance, so I'll just quickly tell you how to balance it. The cash on the debit side, if you notice, the total is 1410, and from this 1410 we will minus the 750 and 240 to get the 420, which is the 420 is our balance CD. That's your cash available for the next period, and this balance CD will become balance PD on the other side. So this is your opening balance for the month of May. For the bank, it is little unusual, so notice that. If you notice in the bank, the three numbers on the debit side, the 2260, 750 and 468, okay, when you add them up, they are less than the payments. The payments are 1710, 2950, 2565 and 220. They are adding up to 7445. So this is a case of bank overdraft. So you paid 7445, but you received only 2260, 750 and 468. So you are left with the 3967 as, so we'll highlight in a different color, and we'll make a notation for that this is your bank overdraft, and we'll show you the calculation once. So this is your bank overdraft, and how we calculated that, let's show the working down there. Same box, we'll show the working also. It is actually 7445 minus all these numbers, minus the 2260, minus the 750 and minus the 468. So bear with us. Okay, red donut. Okay, we had paused the recording for a while, so I'm back now. I've already told you how to do the bank overdraft. The numbers on the credit side in the bank column, they were adding up to 7445, and we minus the three numbers on the debit side in the bank column to get the bank overdraft, which will be shifted to the next period as balance brought down. So you can see that this balance CD goes as balance PD. So cash was brought down on the debit side, and the bank is being brought down on the credit side because it's a bank overdraft. So highlight it differently. Now discount columns, as I told you, we don't need to balance them. We just add them up on both sides. So if you see the discount received or discount allowed column, they've just been added. So discount allowed is $12 and discount received is the $225, which is 135 plus 90. So the thing to note here is that we did not balance the discount columns. So discount allowed stays as 12 and discount received stays as 225, and we did not make the totals equal. Whereas if you notice in cash column, the totals on debit and credit side are equal, and the same is the case in the bank column, the totals are equal. So this is a walkthrough of question 7. So that's pretty much it. Thank you.